My name is Nate Trunfio. I am Senior Director of Sales and Marketing here at Lima One Capital. Extremely excited for what is my first Lima One webinar. So really excited to get into what's going to be an info-packed, action-packed, dropping a whole heck of a lot of knowledge and insights and all things related to single-family investing. I have a very good friend of mine, Mark Woodling from Roofstock here on the line. I'm going to give him a formal introduction here in a minute. We were fortunate enough to become friends through a mastermind of all elite single-family investors throughout the country. And man, he's going to drop some great insights and also educate us a little bit about how Roofstock helps investors of all shapes and sizes on the acquisition side and in the disposition side. Before I get into that, I'm just going to set the stage very quickly here. So the agenda today is we'll go through our intros. We're going to give you a little bit of a tour and explanation on the Roofstock platform. And then we're just going to dive headfirst into any and all things related to market trends and insights of single family investing, specifically more on sort of the buy and hold realm of rental properties. But we'll cover some other bases along the ways as well. Please, we want this webinar to be as informative as possible and for you. So fire away in the chat box with any and all questions. We will circle back at the end. We're intending the webinar of our portion to be about 40-45 minutes, and then we will answer any of the questions you have. So please don't hesitate, don't hold back. Try to stump at least Mark. I'm sure you'll stump me pretty easily, but we're excited to give you all the information that you want from us. And then lastly, just to really introduce Lima One, many of you got to us through our marketing pieces, so you probably know a little bit about Lima One. But Lima One Capital, we're a premier lender in private lending. We are solely focused on helping real estate investors grow. We're confident that we're able to do this by having the most diverse product suite out there, meaning that no matter what type of deal you have, we have some sort of financing solution for it. So that's going to cover your single family fix and flip, any single family bridge loan, helping you build new construction, which is in huge demand right now. It will also finance rental properties, rental portfolios on long-term products. And last, but certainly not least, anything related to a multifamily bridge loan, value add, or if it's already stabilized. That is what we provide in order to, again, create relationships with experienced or unexperienced investors and help them grow and create wealth in all things real estate. Again, I'm Nate Trunfio. My livelihood and career has been all things real estate investing and mortgages and financing. So I'll bring a lot of that perspective. But more importantly, I will start to shut up here, and I'm going to introduce again Mark Woodling from Roofstock. Excited to have you here, man. Please give a little background about yourself and parlay into let's learn about Roofstock.
Sure. No, this is great. Well, it's really cool how we did connect through the mastermind, because you really need to find yourself with more advanced investors because you need to learn from other people, right? I would like to say I've been there, done that, been in the industry 20 years, and then you go to these groups or you attend webinars and you learn so much. You're like, all right, that's very humbling. I don't know it all. So, my career started off going to tax lien auctions at the courthouse steps about 20 years ago, to the day almost. So I was driving for dollars, looking at properties, then going to the courthouse steps and actually bidding on the properties at auction. So 22 years old, didn't need a briefcase full of cash, but we could write cashier's checks, fortunately. But got my experience and cut my teeth by really going and seeing the most distressed of properties out there. And I would do that in about 30 states every single year. So I was a kid out of college, driving up and down streets I probably shouldn't have been, but I got to see a totally different side of real estate that most people really weren't seeing between 2000 and 2007. That was when prices were going up and, people were focused on sexy real estate. So shortly after that, started working at Fannie Mae back in Dallas. I moved back to my hometown and got into their REO auction group. It was so cool because my auction background was perfectly applicable to that day and age, because that's when things were hitting the fan. That's when the recession was really starting to kick in. And luckily, I had this auction background. So I said, I can help you guys liquidate properties. Let's come up with a better plan, because there's properties in Detroit, Cleveland that just were not moving. and they needed to find out what the base price was that an investor was willing to pay. So auction was a great way to do it. So I took that kind of buying experience, selling experience, and shortly after 2012, I worked for a company now called Xome, XOME, which is an auction marketplace, and I became their chief auctioneer. So I started off getting all my auctioneers licenses around the country, got about 30 of them that you needed, not the rest of the other 20. You don't need an auctioneer's license to sell in those states, but just became the deal guy. So became an agent, auctioneer, and have just had a really great career kind of seeing the other side of the coin, right? The less attractive properties. But as we all know, the market's tight. So having that experience and knowing how to get to properties earlier is really applicable today to today, just because we all know it's such a tight supply and you got to be really creative. And even going to the auction, people are comfortable with that now. Before, they were not comfortable. So all that's translated to Roofstock. And so now I'm the director of local market growth. So I'm basically working with turnkey investors, fix and flippers, anybody that's a bit more advanced and really want to build a business around Roofstock. We have buyers that are coming to our site and they're coming from around the country, around the world, and they're saying, how do I buy in and get comfortable? And so I've been able to really connect the supply side and finding the right sellers that call them like a Airbnb superhost that are building a business around Roofstock, and that we can have consistent business. So it's been a nice long run, and it's been really a perfect transition because now technology is driving everything, especially in the pandemic. We were selling virtually before the pandemic happened, so we're now in a really good position to really help both buyers and sellers connect with their needs. So sellers, working with Lima One's been great because you guys are originating the deal, right? You can manufacture properties. You're providing the financing for guys that can find the deal for the cheap, put the money into it, and then fix and flip. But you're also working with the buy side. So if somebody's looking to grow a portfolio, you guys can play that other side of the coin. So that's where this relationship is just getting started. So excited to go into today and see how we can inform the people that you have on.
Awesome, man. Yeah, thank you for that intro, and you certainly show your expertise. Man, I'm dying and itching at this one question. So, to get an auctioneer's license, did you have to go through like a talking fast course? Like, can you, if I were to put you to test at the end of this, maybe would you be able to rip it off like an auctioneer would? Or
I'll have to warm up the voice, do some voice practicing. But yes, you have to get 83 hours of coursework in the state of Texas to be able to get your auctioneer's license. And the funny part is 2 hours of that every day was little tongue twisters and 5, 10, 15, 20, 25, 30, 35, 40, and going through and actually learning the old school way. Except I was raising my hand saying, hey, I'm working for an online auction company. So they didn't like the new school approach. They want to keep it old school.
Hey, if we said we teach people stuff, so at least we gave away that nugget here today so far. But Mark, so let's start from A to Z. I'm a layman, so explain to me, layman's term, exactly how Roofstock then works.
Yeah, absolutely. So Roofstock's a marketplace. That's the number one. By nature, we are a brokerage, just because in order to market properties and handle parts of the transaction, we need to have our broker's license in each state we operate. But as a marketplace, it's really a fluid place where buyers and sellers can come together and transact, right? Sellers come to us saying, we have properties that we want to sell, and we don't like going to MLS because it's difficult for a tenant. It's really difficult to highlight the property in a way that is really appealing on MLS, where you need to know more about rents, right? Or payments on time and so forth. So we identified really the difficulties of selling single family rentals. And we wanted to say, how do we take institutional grade data, tools, and really simplify the process so a buyer can buy from anywhere in the country, or an international buyer can buy in smaller markets and really be able to do it with ease. So Roofstock's taken a digital approach and really tried to simplify and democratize the process so anybody can purchase a property and really feel comfortable about doing their due diligence and doing it swiftly and being able to make confident decisions, knowing that they also have a team such as property managers, inspectors, and anybody that provides a service for those single family homes or single family rentals, all in one place through Roofstock.
Awesome, man. No, great explanation there. And for my understanding, you guys, your marketplace allows people to come and buy properties and sell them. That's a process accommodated for landlords and tenants, bringing in institutional level data, some other services that I'm sure you'll get, to describe here momentarily, so that you can help facilitate more single family real estate investment activity and transactions. Did I catch that right?
You nailed it. And I think one thing to throw on there is, as a marketplace, we're growing, right? We work with supply and demand. So somebody may go to our website today and say, well, you guys aren't really doing much business in California or Arizona. Well, you have to think about what are buyers looking for today, right? They're chasing yield. And it's starting to change quite a bit where even with the pandemic, and we'll get into this, we're really starting to see investors that are looking into new markets. And so Roofstock is really a great way to be able to connect, do the due diligence, review inspections that are on our site, and get comfortable in the event that you've never bought a property before, but you're just itching to. So it's really a good, safe landing place for buyers, whether you're new or you've been doing it for a while. So it's really for everybody. But yeah, we're trying to simplify the process. So excited to get into it.
Awesome, man. No, great. I think, you've hit on a couple of topics that we'll definitely continue to dive into. But look, anybody in real estate investing right now knows that there's just such low amounts of inventory. Absorption rates are crazy low amounts, and there's just not much out there. So it's very relevant to be able to utilize things such as a marketplace in order to facilitate that. Number one. Number two, some of the trends that we've seen with our investors in search for that additional inventory is either sort of expanding their buy box, maybe shifting even investment strategies. Like the build to rent topic is it's the hottest trend in the last 2 years. You hear the buzzwords all over the place. But the other thing is people moving to other markets, and you just touched on that too. Because you cast a wider net, you're more likely to bring in some forms of fish, right? So one question that I personally have, and probably some listeners too, is how does Roofstock help me get the best deal? Am I able to buy properties cheaper on Roofstock than trying to source them myself? Talk to me a little bit about that topic.
Sure. Being in the business for the last 20 years, and being an auctioneer and seeing properties fire sold, but also seeing the top of markets, I think what Roofstock's really able to bring is efficiency to the market. So when I say that is, for sellers, let's kind of separate it. Sellers are able to sell through Roofstock, and it's only a 3% commission. And we pay for things such as inspections. We guide them along and say, here's the title companies that will work quickest and really be able to move through the process. But with that smaller transaction cost, what that really does is it right sizes the transaction. And so a seller can come to us and say, how do I maximize my proceeds? And I think where it's applicable for this group is, if you are fixing and flipping, you're looking at the market and saying, gosh, if I have to put a quartz countertop in and I have to do all these expensive repairs, I'm eating away at my margins, right? And then you look at transaction costs for a typical transaction going to MLS, 5, let's say 6%. Those numbers add up pretty quickly. And the competitiveness, the short supply, all those things, that's where turning to a company like Roofstock, we're trying to minimize those costs. So the seller says, hey, I need to hit this bottom line. And they can really calculate and look at their costs to make sure that when they do go to market, they know that they're not overspending, or, they're able to really cut down on those areas that they can control versus having to placate, to the greater market of owner occupants, people that have emotion in their investments. And maybe there's times that they're overpaying a little bit, but where Roofstock really gets in there is we say our numbers are driven off, our values are really driven off income, right? You always want to be able to support the value of the property by being able to say, hey, what's sold in the local market? So you can actually get the appraisal if a buyer is using financing, but income is the supporting factor. And if you can use that income to really drive the value of the property, a seller is in a better place because markets like St. Louis, typically in some pockets, they weren't able to get a high enough price because there just weren't the comps. But then comes the income approach and investors saying, wow, I can get 10% plus cap rates. Now you're pushing the value up. So I would say it's not a site that you're going to find deals. You're going to be able to justify and looking at it from an investment standpoint and really say, that's a good investment. I like the risk. I like the reward. And then you have all these kickers like appreciation, depreciation, and the benefits that you get with real estate. So from the seller point of view, I think that's kind of the look. But the buyer side, looking at the risk and reward, like I just stated, you're going to potentially get a deal. You may have a seller that wants to, sell something a little bit quicker. So you can always make, lower offers, but it really is a place where, on average, we're getting 98 to 99% of list price. And when we value those properties, it's based on local comps. So, again, it comes down to it's creating a win-win situation where the buyer and the seller are getting fair deals.
Awesome, man. So you might not be able to get the fire sale deals, right? Going direct to seller right now is almost the only way to do that. And it certainly takes a lot of marketing efforts and sales side conversions as well. But what you do know you're getting is quality product that's been very formally underwritten, that clearly spells out, as you said, the yield, the return, compared to any relevant risk, and really keeping it the market fair and even. One thing I wanted to point out, and Mark, where I first caught this sort of trend was through the mastermind that we're a part of. There's been a big push in the last 2 years. Instead of fix and flip to retail buyers, fix and flip turnkey. And it's essentially because of exactly what you alluded to. So we see, what I mean by this is that we see a lot of people who buy distressed assets, renovate them, whether for, previously to sell to retail buyers. They're now renovating them to rental standards. So a little bit lower investment in monies into the property on the renovations. They're then finding tenants, putting tenants in the properties and selling that as a package as a turnkey property to real estate investors. Why are they doing that? Exactly because of what you referenced, is that in the single family world, typically values or properties are valued by a sales comparison approach. What's sold? Okay, we'll find comparable properties. Therefore, this is the value of it. In a multifamily world, and what we're referencing in selling turnkeys it takes an income-based approach. So, your things of NOI divided by cap rate and other certainly more detailed mechanisms there. But it can allow you to sell off the income-based approach, which can push your listing price, your sales price, and therefore put more yield back and returns back in your profit. And hopefully along the way, you're getting a very comparable price to what a retail buyer would pay, but with also investing less money in the renovations because you only had to renovate a property for a tenant. So a huge trend that I know, I've seen personally from a lot of real estate investors nationwide, and certainly, you guys at Roofstock are really just catapulting the whole marketplace off of this similar mentality. One thing I want to dive into some market insights and trends here. I normally take I take a lot of pride in being very honest, but I did lie about one thing. I'm going to actually ask a question from the audience already because I think it's very relevant and a good one. So thank you, Tracy, for asking this. Does Roofstock have staging or open housing capability? And then Mark, I want you to explain your inspection process after answering staging and open house capabilities.
Yeah. So the way Roofstock really approaches, let's say if it's a tenant occupied property, which the majority of properties on our website are tenant occupied, because buyers like to see that these are businesses that are producing income, right? That's when they feel comfortable with the supporting information, supporting value through income. But we do not host open houses. We just feel that by paying for an inspection, we can get in the property and actually provide even more information and be able to call out what was found on that inspection and even what are some of the cost estimates of what it would cost to make this thing pretty much turnkey. So rather than doing the open houses, which is really why we don't feel like putting rental properties on MLS is a successful strategy, we took that part away. We said, you know what? These are only for Roofstock's marketplace. These are not on MLS. Therefore, there's no showings. And we know that buyers come to us because they trust our site. They can become educated. And really learn about investing or get direction on financing. So by eliminating that, tenants are happy because, they could get a little bit skittish if you're going through their property or scheduling too many open houses. And then I think overall, we're not even doing interior pictures for some of those properties because the inspection's capturing a lot of the interior details. So it's a much more technical review through the inspection versus being able to really, dress up and highlight the home. But it comes down to numbers, right? That's what the investors are looking at first. Then they're capturing some of the basic property details, and then they're going to, of course, look through pictures, but there just may be a limited scope of pictures available.
Awesome. Then, and it alleviates the need for staging within all of that. And again, talking to selling off of more of a business minded mentality and an income based approach. So again, awesome question there. Great answer. I can say firsthand after seeing some of the inspections that you guys do in those reports, very, very, very robust, and would give you anything and everything you would need to know about buying a property. So those of you that are landlords out there that know, like, now's the time to dispose of assets, to, cash is king. Let's liquidate. Definitely consider Roofstock for dispositions, as it can be, as you said, Mark, less intrusive to tenants, and certainly can allow you to maximize your list price, proceeds, and profit within that. So awesome. All right, so let's dig into a little bit more of the market. Let me just start with the broadest question of what are you seeing in the market related to single family, rental properties and single family investments?
Sure. And do you want me to touch base on that certification process before we jump into the market deep dive? Or?
Yeah, please.
Let me finish up on that thought because it's very relevant. But, from a seller's perspective, Roofstock pays for that inspection because we know that we're going to get a lot of eyeballs on that property, right? So we're willing to open up the doors and say, let's give more information so buyers can do more due diligence. And again, things you can't see on MLS and you need an agent to be able to dig into that level of detail. We're providing that directly to the buyer. But we do that because we do want curated properties on our site. If something has $10,000 or more in repairs, we're usually not going to list that on Roofstock just because the investor type is like what you're describing with the turnkey properties. These are not necessarily all turnkey, but we definitely call them rent ready. And if there's a property that does have a lot of items needed, items that need to be fixed, we won't certify the property. So it's kind of like buying a certified car versus just a car off the lot. These have been reviewed, gone through our process to make sure that we've checked the boxes and that we will put ourselves in a position where not only are we paying for that inspection, so it's already an out-of-pocket expense, but we provide guarantees. So a buyer can say, hey, Roofstock, within 30 days of me buying this, I don't want it. Roofstock will actually put it back on the marketplace at no cost to you, and we'll resell that property. So you can actually use that guarantee and say, hey, I got cold feet, and that's no problem at all. But we also offer a rent guarantee, and we do sell vacant properties. So if a property is vacant when you purchase it, after 45 days, if you're using one of our property managers and that 45-day hits, we'll start to kick in for part of the rent. So we're putting really our money where our mouth is and saying, we want to be a part of this transaction, make sure you have the best experience. And it really creates a high level of confidence. So not only are buyers reaping the benefits, but the sellers are the ones that really reap the benefits because they're able to get top dollar knowing all those safeguards are in place.
Awesome. Yeah, like I said, very robust inspection and reports. And really Roofstock is there to help support the transactions and make sure they put their word in insights and analysis out, as well as their money where their mouth is. Awesome. So now let's dive into the market a little bit. So what you got, man? Talk to me about what you're seeing out there.
Sure. I mean, I always talk about, let's talk pre-COVID, post-COVID, because I think that's the dividing line that we're all most interested in. I mean, we were off to a roaring start in 2020 and the market did start to pause, right? I think we all saw that moment where lending tightened up. People just weren't sure what was going to happen. So it was a bit of a panic mode, but we quickly saw investors coming back into the space and saying, you know what? As long as tenants are paying, and they were really seeing numbers that were much higher in terms of collection versus what they were foreseeing, That's what brought the confidence back immediately. So really by May, our numbers started going right back to where we were before and then continuing. So I think the shortened supply, we're all seeing that it's causing buyers to, see less property. So they know that they have to act quickly. So the demand levels we're seeing now are some of the best that we've seen yet. So we're really bullish on what's happening in 2021, where rates are so low. I mean, you can really squeeze every penny out of your investment, knowing that you're paying for mortgage rates that are really unprecedented. So right now, my kind of gut feeling of the market, we're going to keep going down this path. And I think we're going to run into supply issues for the long haul. So that's why working with companies like you and your borrowers, we want to be able to say, how do you manufacture properties? Because it's not like properties just will come on the market easily. But if you can create that flow of properties, we can create the kind of back end system so we can take care of the sales marketing, but you guys are the ones that are creating those properties. So I think we're just going to have to get to earlier in the process, right? Say we want to help sellers develop really the strategy, and we'll give you all the data we possibly can so you can build confidence and say, you know what, Roofstock's my exit strategy of choice. So we want to be able to build those relationships, get more people into fixing and flipping with confidence, knowing that if the market does turn, we know that the rental income is supporting the value of the property. So, with the emotional purchases of owner occupant, sales, you're going to see that for a while. But if the market starts to level off, maybe, people found their homes and there's less owner occupants looking for properties, the investor side, the demand levels that we're seeing are just going to keep on growing as long as the price points don't jump too much. But there's institutional money. There's a lot of pent up demand where people are saying, hey, I want to take my money out of the stock market and put it somewhere where I can control costs, see a little bit more of a typical expected return. So I think we're going to see a lot more investors feeling comfortable with this remote investing. And then we're going to see hopefully a little balance of inventory where, these fix and flippers like yourself and the readily available capital will keep the supply coming to sites like Roofstock. So overall, I feel like this is a very safe place to be. I mean, there's no sure win, of being in the perfect place. But I think seeing what happened in the last recession, when values were going down and, you were seeing losses in some markets, the rental amounts never went down. They didn't dip. So if you're in these properties for the long haul and you're looking at buying and holding, like you were talking about earlier, I think you're in a safe position to ride out this and, take advantage of the low rates, take advantage of some, new markets that you typically didn't have available to you. And now Roofstock's opening up those doors to make those markets available. And I think it's become a global marketplace, right? So, anybody can invest and do it comfortably and do it remotely. And that's just really an incredible change that we've seen move along really quickly throughout COVID.
Awesome. Yeah. I mean, look, single family rental investments is, it hasn't stumbled. As you said it well. The collections held very strong. I think we're starting to see it dwindle a little bit. There's more stats coming out on multi than single family. Always, it's easier to get that information. Starting to go down, or maybe 150, 200 basis points less in collections in December and January. But with whether you look at the flight to the suburbs or the lack of a desire to be in multifamily assets, there is a ton of focus in single family rentals. Certainly, there's a lot of fundamentals that you referenced as well that bode really, really positively for it. I'm big in multifamily space. I've never heard more multifamily operators and investors talk more about investing in single family than I have over the last 6 months. And that just tells you, that there's a lot to be attracted to single families for, because in the commercial realm, certainly some industrial and life science investments are touted as some of the best now, or the strongest, safest now, but multifamily is right behind that. So if you see a lot of multifamily operators looking at single family, you know that it's a good place to be. Like you said, the only thing that's guaranteed is that nothing's guaranteed. So certainly keep that in mind, but certainly the fundamentals bode well. What I'd love to have you talk on next, because again, I know you see buyers and sellers of all shapes and sizes. I was reading something recently about a lot of the big boy single family rental aggregators have reduced their targeted returns. So they're willing to accept lower returns on single family rental properties just because of demand, low interest rates, the anticipated appreciation. So I hope I don't give you too many of the answers to that question there, but what are you seeing in relation to, investors buy boxes, and whether you want to talk about larger to more local type investors, or however you want to sort of interpret that? Talk to us about, yield in the buy box that people are looking for.
Yeah, sure. So, so everybody knows Roofstock has our retail marketplace where if you go to our site, you'll see single family homes for sale, individual properties. You also see portfolios. Most of those are what we would consider retail transactions. We also work with a number of institutions and some of the biggest players out there. So I'm going to be a little cautious about what I'm able to talk about, but I think it's just the general scope of really what I see with institutions is they're going into different markets now and they're saying, we want to go where competition isn't necessarily as high as it is, like the Phoenix, Arizona market and Charlotte, North Carolina, where it's a mixture of iBuyers. It's a mixture of institutional capital. And then you have the retail players that are out there. And there's some large retail investors that they're focused on just one market. And that's some of those more advanced real estate turnkey investors, but they're having a tough time even. So, they're having to get more creative. And that's where I think you're seeing markets like the Little Rock, Arkansas, Tulsa, Oklahoma, where you're just one layer below where the institutions have come in and said, hey, we're going to have our way and just really clean up. So you're seeing smaller operators start to move in there. And then they do have that lower cost of capital because there's so much money chasing deals right now. I mean, you're watching what's happening in the stock market and IPOs. And then you think about how are these companies also diversifying and looking at brick and mortar, tangible assets that they want to own. And their cost of capital at the institution level is crazy low. So they can get the returns that they're looking for because their expectations aren't that great. And they are diversifying outside of multifamily and finding that, what they've seen in the newspapers with single family is something that is real. They just need to find operators that can help them manage those costs, right? The expenses of property management. So that's where Roofstock helps guide them in certain directions. And but we're seeing so many other players that are doing this individually that, I would say from the retail investor, the guys looking to do one property at a time, try to find those little pockets, right? Get away from the typical buy box. And a lot of those buy boxes for Zillow, the Redfins, Open Door, OfferPad, you can find that information readily online. So use that information to your benefit, and then get crafty about where you're able to look for deals, because there is more interest in the suburbs, right? And even getting into rural and tertiary markets. And that's where these players won't necessarily play, right? If there's not a direct flight from New York, I always say you're probably not going to find institutional players in those markets. So I would say don't let it disturb you, right? There's always going to be a demand level that you can go find. Buyers are wanting to buy. You just need to be able to find that supply. So don't let the institutions, take you out of your business. Just get a little more creative and find out what their ranges are and play around with it.
Awesome, man. Yeah, I mean, whether institutional sources diving into areas and markets that they're just expanding their reach, or the iBuyers coming in disrupting some things, there's still opportunities out there nonetheless, and some great feedback from you on where to look on that. I want to take that question one small step further there. Like, so have you seen essentially cap rates compress, or investors of however you want to talk, of all shapes and sizes, look to accept lower yields, higher yields, the same yields compared to COVID? And if by chance, I know there's a lot of variables and risk appetites out there, but if there are any specific numbers and metrics, IRR, cash and cash, what have you, that you want to tout along the way, I'd love to hear that, but interested in what you're seeing in regards to whether it's cap rate compression or targeted yield.
Yeah, I think cap rate compression is the obvious, just because we are seeing values move higher, especially in lower value price buckets. They're easier to move higher just because now buyers don't realize, from a percentage basis versus a dollars and cents basis, percentage goes up a lot quicker if you jump up $5,000 on low value properties, right? So I think that's where the calculations are getting compressed, but we're seeing a lot more buyers look for higher value properties because they see less risk. They're seeing higher appreciation rates, and they do realize that people have moved from some of the larger cities and urban areas out to these suburban markets. So it is real. And I was actually just talking to our buyer advisor team this morning, where these are the groups that will take the inbound calls for buyers that want to buy through Roofstock and have questions. Tell me about lending, insurance, give me an idea how Roofstock works. But what they're hearing is, where do I find the higher value properties in nicer markets? But it's not the larger Charlottes. It's more of like an Augusta, Georgia. Like what's the major industry drivers there, and what can I expect in terms of returns? So I really appreciate the fact that buyers are going to a safer place, just because I think COVID changed that mindset. But you're always going to have the players looking in a Gary, Indiana, right, and chasing pure yield there, because I'm not sure you're going to see much appreciation, but you are going to see that cash on cash return, lower value points, so you can diversify a little bit. But overall, I would say we're seeing healthy things across the market, but you are seeing a balance. We call them appreciation ace, the guys that are just looking for the higher value markets. And then you have the cash buyers, right? The guys just looking to get lower value price points. So we're seeing a variety, but it's great to see that there is more of an eye towards these higher value markets. So Roofstock's growing into those areas, not just in these Rust Belt, in kind of the Sun Belt markets, but really getting into, those higher value points.
Awesome, man. Well, you opened up a door for another, interesting topic of what markets are you seeing sort of the most action? You've talked about a number of them, but markets with lots of action, or even trends and up and coming markets that you're seeing. So again, I know you've said some of that already, but love for you to sort of attack where you're seeing some of the hotbeds out there.
Sure. What I was the most amazed at in 2020 was St. Louis. St. Louis became probably one of our top 10 markets that we were doing quite a bit of sales in. And next thing you know, it's our number one. So we saw more investors coming into kind of the northern areas of St. Louis and seeing 9% cap rates in what we would call like a 2-star area, call it like a C plus type market. And so Roofstock, by the way, has our own algorithm. You go to our site, you can see neighborhood scores, and it really breaks down, crime, school scores, economic activity, and really just overall a risk assessment. So you can look at it from a number point of view, right? And really say, I can use this across the board. I can go to any state, any city, use a number, and it makes sense city to city, and not this kind of subjective, C, D class type area ratings. So there's really some great information. Go to our website, you can check that out. But what I really liked about St. Louis was there was a balance, right? There was enough inventory where it was healthy. Buyers could pick up properties for a very good price. And it's almost as if the market, so the old school landlords that had these huge portfolios, didn't realize the true value of what institutions and retail investors were bringing to the market. So a wholesaler could pick up properties, a fix and flipper could purchase from the wholesaler and be in a property at like 30, 40 grand, put 20, 25 into it, and they're still flipping for like 70, 80, $90,000. So there were some healthy returns in there. It just depended on the level of rehab, but we saw the volume, right? So there was enough volume balanced with a demand. And then we're seeing that in markets like Tulsa. So we're just moving into Tulsa right now and really trying to scale that up. But again, there's no institutional money chasing deals around and getting to the properties way before we are from the wholesalers. But fix and flippers are able to buy from the wholesalers and kind of get this nice supply chain going and end up selling on Roofstock. So we're still seeing tons of activity in the Southeast and Midwest. We're trying to expand through a few other programs right now where we're actually going to MLS with some specific partners, and they can identify quality deals on MLS and then submit them through to Roofstock and say, hey, get this on your website. And if a buyer makes an offer, we're able to work with that local buyer agent that can help with the transaction. So a little bit of a different service than just our exclusive listings that you see on our site mainly, but it's a way that we can really keep feeding the demand and then go into new markets where if an investor says, hey, I want to buy in Wichita, Kansas, we'll say, all right, let's see if we can form that relationship with the MLS, pull some properties, from it to test the market for that buyer versus going and doing all this business development. And, we're a brokerage going out and finding those properties directly with a landlord. So yeah, we're seeing tons of good activity. I would say we're still not doing a lot in like the Arizonas, the Californias, kind of West Coast. We're just about to break into Colorado, thinking more like Colorado Springs down to Pueblo, which are, tend to be a little bit lower value than Denver. And so if there is feedback and you guys are saying, hey, this is where I really want to find a property, we're happy to work with buyers on that level and say, let's put a plan together and look into that market. But also on the seller side, if you say, hey, you're not in this market, Mark, why not? Well, if we start to see some volume, you say 10 properties, we can get the property management in place with our preferred partners. We can talk to the local inspectors and put the infrastructure in place so we can build a system where buyers can buy from those sellers and then have all the proper team in place to really be able to grow. So, being a marketplace, we're totally dynamic. And that's what makes us fun, is that we will flow with the market, and where we feel there's supply and demand, we want to be able to pull those two together and make a connection.
Awesome, man. Great feedback. And so I have these are like my prototypical two last questions of any webinar podcast that I run. But what's funny is some of the things that you talked about, there's some questions that I don't think you saw that I'm looking at that we'll be asking here in a minute related to some MLS comparables and then some markets that you're not in. So this is also my last cry to say, please continue to pump the question box or the chat box with questions. We'll get to that here in 1 second. So at Lima One, and I know at Roofstock, and certainly you personally, Mark, we're all about just providing value. So whether we work with you and finance your deals or not, we want to continue to bring you good information and insights. And so my last two questions are sort of gives, as we'll call it. So my first one is, I'm a big reader. I'm a huge believer in the acronym of CANI, continuous and never-ending improvement. So what's a good book that you would recommend? It could be related to real estate investing or not, but what's sort of your hottest read lately that you can give to the audience here?
Sure. So I had a 3-day weekend this weekend. So I was kicking back and reading Scott Galloway. He's a NYU Stern Business School professor. He's marketing professor. He's absolutely fantastic, but he wrote a book. It's called Post Corona. So it's really from almost looking at it into a futuristic, set of how do you get in somebody's mind that is just totally rewired differently than the rest of the world? And what has he seen from his angle and from a marketing perspective? And where's the market going to go after this? So cool insights. I mean, he's super quirky, so you have to kind of hold on for some wild rides. But I'm halfway through it and I'm already thinking about 2022. Right. So there's only so many people I really trust their true vision of where the market's going. And I think he focuses on big tech. So, I know that's kind of controversial right now, but he also focuses on, where we've been from a brand age, where branding was everything, like Mad Men style, to now becoming more of product age, where it's about reviews, right? And what people think of you and how information is so readily shared and available, and really being able to control that. So I look at that from a Roofstock perspective and saying, we have to be the best at customer service ever, and we need to be obsessed with it. So it's a good reminder of not only what's happening in the future, but like where things have changed just over the last 6 months and a year, and how important some of those things are if you're, running a business and managing it.
Awesome, man. Well, it sounds like right up my alley, quirky and insightful. And then we at Lima One too, it's a huge focus. The other gleaming face that you see on a lot of these webinar, Dalton on our team is solely focused on his old world of running broker, but also customer experience, because we know we continue to need to be best in class with delivering that. So my last question then is one last give. what's sort of your, piece of advice for anybody here related to investing in real estate in today's day and age?
The one thing I always go back to, and I've seen some ups and downs in real estate, and man, I'm 41, so trust me, I still have a lot to learn. But it's time in the market, it's not timing the market, right? If you can time the market, you are a rock star. I'll take some advice from you. I need to see a resume and some history behind that. But if you can stick to your plan, you come up with a really nice business plan, and your market. I don't think it's as important of timing the market, because there's always going to be influences like interest rates, right? And availability of properties. But if you are that subject matter expert and you can get into the market and continuously buy, but also know when, things get a little risky and be able to keep your emotions out of it, I think that's going to be a key to going forward, because there's just not a lot of inventory out there, and everybody gets, a little bid happy and trying to overbid people because of that short supply. But stick to your model, stick to your numbers, and I think you're going to be able to adjust your numbers to fit the market, so you're not necessarily timing it, but you got 10, 20, 30 years ahead of you, and you got a lot going on with real estate and a lot of benefits that come with that you're not going to get with other investments.
Wow. Awesome last piece of insight and advice there, man. I love it. Sounds like stock advice as well that you read all over the place. Time in the market versus timing the market. And don't let your emotions get the best of you when making buying decisions, especially in real estate or stock market for that matter too. Awesome, man. So definitely been blessed to have you here. I'm glad to say that for the most part, the questions we have thus far to put you on the spot. So I will continue to moderate. And the first question I want to ask was, why are some properties on Roofstock listed higher than on the MLS?
That's a good question, because, the properties that are on Roofstock are not on MLS. So I don't really quite understand that question, just because they may be priced at a point that Roofstock feels comfortable with. Like, we'll actually run a value on a property before we list it. And if a seller is at a higher price point, we'll actually not list it on Roofstock, because we'll say, why get into it? If it goes through an appraisal and financing process, it may not appraise. Why would we list it? Because it's just extra time and effort. So the properties that are listed on Roofstock are actually very well priced, because we've done our due diligence, and we'll actually post our values in a place. So if you sign up for an account on Roofstock, you'll have access to our inspections and our valuation report. And so I think it's a good place to be able to say, hey, what comps did Roofstock pull? Are those truly comps? You could do your own homework and look at it from a sales perspective. So I think what you see on Roofstock is very fairly priced, because of that process we have in place.
Awesome. Great. And as you said, the platform keeps everybody honest and showing exactly how you came to the conclusion of the pricing. So awesome, man. Great feedback there. So you talked about a couple of markets you're not as robustly in. One specific question here is, Roofstock's not currently offering properties in Hawaii, which if you are, I would love to do some site inspections. How come? Will that change in the near future?
Sure. So I described a little bit about the program where we can pull properties from MLS, and I think that would be a good one to start with. So I'm happy to give out my information and my email address, maybe in the chat box. So if you want to email me a few properties that you're eyeing and just give us an idea of kind of what you're demanding, we can take a closer look. But again, we can set up an agent to underwrite properties and post those to Roofstock, so you can see it through the Roofstock lens. And that's really where people see the value. They'll see some of those same guarantees applied. We'll still pay for the inspection. But what it does is it may open your eyes and say, wow, I didn't realize that that's a 1% cap rate, because although property taxes are the lowest in the nation in Hawaii, you're still paying, $700,000-800,000 minimum in some markets for properties. But I'll put one more thing in the chat, and it's actually a website that we have. It's called Cloud House, and you can type in any address in the country, and it's going to pull in information. It's going to estimate taxes, insurance. It's going to have your vacancy rates. And then you can actually change that and say, based on this estimate, here are all my assumptions of what I think expenses would look like. What does the cap rate look like? And it's just a cool kind of, off the cuff, back of the napkin way of doing some analysis up front. And you can use that for any, you can basically log in, just give us your account information, right? So you can access that, and then you can do all the due diligence you want on your own. So that may be a good way just to get a realization of what the actual numbers look like. So a place like Hawaii, I would love to open up, like Nate's saying, we'll meet out there, we'll hang out and drink Mai Tais, doing business together, and getting out some loans. But we want to make sure that's truly something that you're interested in before Roofstock does a lot of the work to get those on our website.
Awesome, man. Yeah. So I know something just fired in, but please make sure you type that in the chat box for everybody. Save me from using some of my ugly Excel-based pro formas as well. So I will be checking that out for sure. Off the heels of talking about Hawaii and other similar markets, there's a question here, and I can certainly give so my 2 cents as well on this. But what's some thoughts you have on the strategy of fixed to Airbnb? And anything you got on that, Mark?
Yeah, man, that's a great, well-timed question. That's something that we're considering very heavily right now, because it's a way to get into these pockets in different markets around the country that you just know there's not, the institutional players are not there, right? And having a vacation rental manager that can identify properties and say, hey, we can manage this. Here's what your estimated utilities look like, and so forth. We're getting to a point where we know that's going to be more important, and to be able to compete and kind of help investors move into new markets with confidence. So we're not there yet, because there are a few calculation differences, such as the utilities, and that information is hard to come by without having that local expert to be able to provide that to you. So that's something I would look out for in the next maybe 4 to 6 months. But if you have properties that you're eyeing right now, we're happy to take a look at them and give you some feedback and say, you know what, if this is a model where you can manufacture deals, and we say, hey, you're going to sell 1 or 2 of these a month, we're happy to, create a little more urgency and move that priority up. And so, we just want to be able to help the supply meet the demand. And if we don't know about the supply that's out there, it's hard for us to create the demand. So, even if we can't do it now, definitely, I threw my email address in the chat box. So definitely shoot me an email and let's stay in touch.
Awesome. Yeah. And my 2 cents on top of that is certainly can be bullish, but in the right market. I think a lot of people are squirmish about an Airbnb play now, given COVID. As restrictions are being lifted, certainly is going to help that strategy. But you got to make sure that there's the right demand for the Airbnb product, and that it's in the right market. And then, as you also just said, look, I look at and underwrite a lot of multifamily deals. I've never seen a pro forma that didn't look good. So my advice is make sure that you're using conservative assumptions when modeling out your sort of fixed to Airbnb model, because you can very easily play with occupancy rates to boost NOI. And if you didn't do the right market study and study on demand, you can miss by a lot. And that's my just sort of advice on that. Very good in vacation type markets, or even not traditional vacation markets, but where there is a specific form of entertainment or attraction that draws a big crowd at certain times of year. So figured I throw my couple cents in there, and then we'll probably make this the last question. So the question is thoughts about the Baltimore market, and I will just give the quick insights of we write really attractive, competitive portfolio loans. So it's minimum 5 properties, $500,000 loan amount. You can put a lot of properties in this with very attractive terms. Baltimore has been one of the hottest markets we've seen in originating that portfolio rental loan product. Not to mention, I've seen a number. I'm in Philadelphia area. I have a lot of personal investor friends that have transitioned from the Philly area because there's just not much inventory into Baltimore, as there seems to be more inventory, and the numbers definitely make sense from a cash on cash perspective, even if you're buying it with just cash. some really good rental return rates. But Mark, you're certainly probably more of the expert in that. Any insights on good old Baltimore there?
We do not have much experience in Baltimore, but I'm really looking to build relationships there because we have the infrastructure set up. And same goes with Philly. I feel like they're undervalued markets that you can still pick up properties for really affordable price points, put the right amount of work into it, and there's a significant amount of rental demand. So I don't think you're going to have issues, whether it's Section 8, which, by the way, our investors love Section 8, where you can get the rent amounts, you can buy at the right price point. So it's really just a matter for us of connecting with the right folks, making sure the money is flowing, which sounds like you guys are definitely able to lend in those areas. So I would be very happy to have those conversations and build those more repetitive relationships, just because we do see that those markets feel undervalued. So I think there's room for appreciation on top of all the good rental returns.
Awesome. Yeah. And just make sure you're, familiar with the cities, right? Especially your primary cities. You referenced Philly and Baltimore. Certainly can change block by block. And in some of the blocks that are a little rougher around the edges, the rental returns look great. But quality of tenant can be in question, and so on and so forth. So in those primary cities, make sure you really understand what section of town you're sort of getting into. Awesome, man. I'm going to ask you first, and I'll give how can everybody reach you?
So I threw my email address in the chat. It's Woodling. So first initial, last name at roofstock.com. So reach out at any point. If I'm not the person to be speaking with, I don't typically work with buyers, but I can pass you along to the right people that will handhold you through the process. For anybody that's looking to sell, I can definitely help you out. So email mwoodling at roofstock.com. And we then check out that Cloud House tool, play around with that a little bit. And sometimes the numbers aren't perfect, or if it's a duplex, triplex, or quad, sometimes it's a little funky because addresses don't go in that system very well if you don't have it perfect. But yeah, play around there and get to know Roofstock, see what our inventory looks like.
Awesome, man. Yes. Thank you again. And please, for any and all of your real estate investment financing needs, you can call us at 1-800-390-4212, 1-800-390-4212. Email your financing request to sales@limaone.com, SALES at limaone.com. Follow me on social media. I try to put out valuable content. But Mark, man, thank you so much for blessing us with all this knowledge and insights. Make sure you keep Roofstock in mind as a great marketplace for buys and sells and all things rental property related. But thank you all. Appreciate your time. Hope you have a phenomenal and profitable rest of your day. Thank you.
Thanks, Nate.